Hi, this is Pat Walker at Mission Winners. A lot of people look at charts and they don't really ponder what the charts show. Yes, buying and selling pressure, but price and volume play into this decision-making and analysis process. I want you to think about this. Charts, again, are a reflection of people's emotions. Fear, greed, panic, complacency, ego. I'm going to give you a classic example. Take a look at this. Chegg. This is a current chart, by the way, right here. It rallies right up and hits new highs. How did it close on that bar? You like stocks that when they move up, they close near the highs. It closed at its midpoint. What does that mean? It was met with some buying pressure, but it was also met with some selling pressure. There was not a lot of conviction in that bar. And you always look at it in relation to previous price and volume bars. Look at this bar. Heavy volume, and it closes strong. But then the next bar, heavy volume, and it closes down. It didn't close down much, but it did close down. And note, it gapped up, ran up, and fell. Closed just a little bit above the half point of the range, but there was selling on that bar. Then you have two quiet bars right here on low volume. And then it lifts off. But please note, look at the volume on this bar versus the volume on this bar. It's much less. Much less. How did it close on this bar? It didn't close that strong. It closed a little bit below the midpoint. What does that tell us? There's not a lot of buying conviction, and there was some selling on that bar. You advance at one bar. It gaps up. Oh, everything's great. And then it drops like a dang rock. Volume wasn't that heavy, but there was serious selling on that bar. And its price actually took out the lows of this bar. You take the action on this bar, combined with the action on this bar, combined with the action on this bar, it's telling you, hey, you might want to get out, be careful, and look what happens. You get this. That's a pretty heady drop. But then you can say, everything's beautiful. It comes back up. I bought it up here. Look at that. It's coming back up to my price. Everything's great. Folks, think about it. Somebody bought this sucker near $90 a share and watched it drop all the way down close to 60. That's freaking 30, lost third of your money gone in a stock. That's dumb. You're buried in it. Why do that? It screws you up financially. It screws you up emotionally. It's like, well, maybe it'll come back. All right. And it comes back. And lo and behold, look at this. It comes back up right near the old highs. The high on this bar is 89.82. The high on this bar is 89.99. How about that? It runs up, but I want you to look at this bar. Open, high, low, close. It gaps up, it runs up right near old highs and closes below where it opened on a pickup in volume. It was met with selling. Who sold? Who do you think sold up there? Think about it. Be pragmatic. Charts are a reflection of human emotions. Who's selling? Well, I'll tell you who's selling. The people that bought it down here and that have a good profit. You think the people that bought it up here and watched their, get ripped, and it comes all the way back up to their price? And what do they say? Thank God, Ethel, we can get out. We've protected our ego and we've protected our profit, our pocketbooks. Well, I'm going to be very honest. Please don't try to protect your ego. Protect your pocketbooks. Control risk. But this right here, this bar is talking. And isn't it ironic? It basically came right back up. Look at that line, folks. Came right back up to the old highs. And it was met with selling pressure. I wonder what happened next. Oh, gee whiz. Look at that. That hurts. I mean, that's getting spanked pretty bad. So what do you do with it? You manage risk. By selling properly up here and maintaining a small loss, if you bought it up here, all right, which is pretty dang aggressive. If you bought it, sell, get the heck out of it, and then you don't have to weather this. This is bad. I'll keep it clean. This is bad. Don't do that to yourself. This is bad financially. This is bad emotionally. Nothing's more frustrating to have crud like this happening. You know what happens? You get a couple of these doing this, you know what you get? You get the freeze. You get scared. And when you get scared, you don't think properly. And when you don't think properly, you don't make good decisions. Don't do that to yourself. Control risk. Right back up to those old highs, and they spanked it right back down. There you go. There's a valuable lesson here for you. Enter right, control risk. Control risk. Charts are a reflection of people's emotions: fear, greed, panic, complacency. Learn to read it, and you'll be better than most investors.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.